Let's do the September market update. Danny, thank you as always for pulling numbers. Let's do really quickly market at a glance. These are our numbers for this month at a glance compared to last month, compared to last year. A couple things really stood out. We're way up in inventory. That's a significant amount. And while we're up in inventory, the sales price keeps growing. We'll get into details a little more, but we do look like we're still firmly in a seller's market, sliding towards the balanced level. We're not even close, though, I would say. We're still a fully seller's market. So let's start off with the number of homes sold. Danny, let's run through numbers for this month.
Yep. So you can see on the chart here, we had 2,257 homes that were sold in the month of August. And you compare that to August of last year, all the way over on the left-hand side of the chart there, we're up 17 over the prior year. So that's pretty close, right? Not a big change year over year. Month over month, we're down 4%. So you can see the shift there. This is really just us kind of getting over the peak period for the year. We've talked about that before. Things we expect are going to continue to cool off. As you mentioned, inventory's up. Almost 4,000 homes currently active on the market right now. And while that's up only 3% month over month, it's up 32% year over year. 32%. That's huge. And so despite all of that, we're sitting at 1.75 months of supply, which is a little bit up from where we were last month. But to your point, as you opened us up here, we're still very much in the seller's market.
Yeah, this is more inventory than we've seen in the past 5 years for sure. Probably longer than that. This is a significantly large amount of homes for sale. Now you'll see the average sale price continues to go up. We thought, and I still continue to believe this is true, that the reason the prices were going up so dramatically is because we were supply restrained. We're starting to lose the restraint now, but we're still climbing in the average sales price.
Yeah, and that's interesting. I mean, I think this is a surprise to both of us this month when we looked at the graph. You can see like every year it kind of goes up in the summer and then it trails off. You can see that, you know, the orange line, which is the actual sold price, versus the blue line, which is the list price. Those things tend to catch up when the market's really hot in the summer, and then they kind of separate as we get into the slower months of the year. But usually it's just kind of a normal curve up and then down and then up again. Here we went over the peak, which we expected as we came out of summer. Things dipped in July, which looked normal, and then all of a sudden, boom, we're up again in August. So that was a bit surprising. That's going to be a watch item for us. You can see that both the average list price and the average sales price went up month over month. And the other notable thing here is while we're up month over month, look back across a year ago, we're actually up 6%, or about $25,000 in the average sold price compared to just the year prior.
Yeah, that's a little faster clip than we were expecting as well. Again, that's why I think these numbers taking us by surprise a little bit, especially for this time of the year, accounting for seasonality. The rest of the numbers are pretty much as expected if the market's balancing out. Percentage over and under asking, those metrics are starting to creep back towards a normal balanced market, still firmly in the seller's domain. But Danny, take us through the details.
This is the stacked bar graph of homes that sold within plus or minus 5% of their asking price. So right around asking, right? That's the big blue section. You can see that every month it's about 2/3, maybe 70% of the homes that are sold. The things that change the most are that orange section, which are when things go 5% or more below asking price. You can see how that changes as the market cools down and heats up. And then the inverse of that is the things that go 5% or more above their asking price. And again, you can see that in the hotter months of the year, you have more things as a percentage of homes sold that are going 5% or more above asking. So you can see these last couple of months, they're almost a carbon copy of one another, right? So very, very similar. But then the trend line is coming out of the summer, things are starting to shift. They're sitting a little bit longer. You have fewer things going for over asking and more things going under asking.
Yep, and we're actually starting to sell as many under asking as we typically do in November, at least last year, which is really surprising. And just another sign that the market's starting to balance out. Days on the market tells the same story. Looks like 11 days is the median as the better indicator. Not much to say there other than seems like we are starting to balance out. The price reductions, Danny. This one, again, as expected, but a little more than we would have predicted probably.
Yeah, I think this and even the last chart, it's the same shape of the curve, but we're just kind of a step higher this year, right? So you can see here that 32% of all the homes that sold in August sold after there was a price reduction, right? And you can see again, kind of the reflection there on the curve. When things are hot, you don't need as many price reductions. When things start to slow, that's when you have to start to reduce your price to get a little bit of interest. And so while the curve is kind of the same shape, we see that there's kind of this rebound last year from the low in May and up in June and July and August. August of last year was only 26%. And this year we're almost a third of homes that sold. So again, a watch item for us as we continue to move forward here. Same shape, slightly out of phase, and definitely something to keep an eye on.
Yeah, and then finally, the 30-year mortgage rate info. This is something a lot of people are keeping up on. And we've been saying, and we continue to say, we expect this to go down significantly in the near future. But for now, more or less, we're ending the month, at least when we pulled the data, where we've been, 6.5%. We did hit a point earlier in the month where it was 6.125, which signaled the lowest point of the year. And then they went back up from there. So a live dynamic metric. We'll continue to watch that. That affects a lot of people's payment, affordability overall in the housing market. And again, a watch item. Remember our prediction here, if those numbers fall, if the 30-year mortgage rate drops significantly, the housing sales prices will go through the roof. They'll probably do the inverse curve of whatever happens to the mortgage rate. So something to watch. Danny, thanks as always for pulling the numbers. We pull our own numbers. We have the general metrics by zip code on the final graphic here. And we'll continue to keep you up to date and let you know what's happening in the market.